Good morning, investors. Welcome to another TipRanks webinar. My name is Ari Gutman. I am the Customer Success Manager here at TipRanks. It is an absolute honor to be back on here with all of you. If this is your first webinar, you're just popping on here with us for your very first webinar, I would first and foremost like to welcome you here, but then actually share with you a little bit about what we're about to get into in today's webinar and how exactly we go about these webinars. So essentially what we do is we paint a bit of an economic picture for ourselves before we even get into a TipRanks tool of the week. Now for today's webinar, we're going to actually go over a few different tools and features on TipRanks just based off of everything that came about within the last handful of days or so that had unfolded for us as investors. Now, with that being said, I want to dive right into what we have going on economically speaking. And I want to share with you all that last week I had the privilege of actually being in London. And on Friday, I was walking in London, exploring the city, and I looked down on my phone and I see that the market was just in complete chaos in red. I stopped dead in my tracks and I tried to figure out quickly what was going on. And of course, it came down to the jobs report that came out. So it was expected that the US economy was going to add 187,000 jobs to the economy. And on Friday, we had massive breaking news that 517,000 jobs, it's over 500,000 jobs were added to the US economy. So again, prospectively speaking, it's always important for us to put this all into perspective. We were expecting 187,000 jobs, whereas we had 517,000 jobs reported added to the US economy. So in consideration to what the Federal Reserve is trying to do, which is ultimately raise unemployment, that was a hefty number of jobs that were added to the US economy. So what ultimately happened to the unemployment numbers? Well, unemployment came down to 3.4%, and the expectation was that unemployment was going to go up to 3.6%. So what exactly does all of that mean for us as investors as we're making our way more into 2023? Well, essentially, all eyes and ears should be on the Federal Reserve, which in one hot second, I'm going to get to a video clip that I hope it works through Zoom here for all of you as I share my screen. But I think it's pertinent that we all take a look at what the Federal Reserve is doing, what they may be doing well into 2023, and most importantly, that we all hear it from our Fed Chair Powell himself, because I can go on and on from webinar to webinar. As I've been saying, as we concluded 2022, I've been sharing we're going to ebb and flow our way into the new year. The Federal Reserve is likely to keep hiking interest rates, perhaps not at the pace they've been doing, but to continue to do so just because the labor market is incredibly robust. It's very strong. It gives the Fed the room that they need to actually continue to hike interest rates. But before I get to that clip, I really want to circle back to why this information is so important for us as investors. And that is because 2023 may very well be another uncertain year, if you will, if you're an investor and you're looking to get heavily invested into the market. And of course, depending on the type of investor that you are, if you're a longer term investor, it's in knowing this economic backdrop of ours that at least gives me not only great confidence as an investor that I'm aware of what's going on, but most importantly, painting that picture over this next 6 months to a year, what I can potentially expect. Now that expectance, right? It's not that I can just predict what exactly is going to happen and that's how it's going to unfold. But in painting at least a picture for myself, I can begin to look at certain sectors and paint the picture for that specific sector. And then I can even pick some stocks and ask myself some deeper questions, like how may this particular stock perform if the economy is as X, Y, or Z? So in just knowing, again, that bare bones economic backdrop for ourselves, incredibly important as investors. To share my screen to do it is exactly what Fed Chair Powell had said.
These are the very early stages of disinflation. So the services sector really, except for housing services, pardon me, is not really showing any disinflation yet. So our message really was this process is likely to take quite a bit of time. It's not going to be, we don't think, smooth. It's probably going to be bumpy. And so we think that we're going to need to do further rate increases, as we said, and we think that we'll need to hold policy at a restrictive level for a period of time. Then comes the labor market report for January. and it's very strong. It's certainly stronger than anyone I know expected. And so, but I would say we didn't expect it to be this strong, but I would say it kind of shows you why we think that this will be a process that takes a significant period of time. The labor market's extraordinarily strong. And by the way, it's good. It's a good thing that inflation has started to come down without it. That has not happened at the cost of a strong labor market. So, and of course, since then, the financial conditions have tightened significantly since then. So
I want to play that for everybody because it's important to understand what Fed Chair Powell is saying every time he comes out and he speaks. He's essentially giving us everything that we should expect in the coming months. Now, the Federal Reserve, from FOMC meeting to FOMC meeting, they're looking at the data, they're analyzing the data, but essentially they're trying their best to forecast what may come about in the coming months. And then when they get the data, they're making decisions. Now, the data that they just got certainly gives them a lot of room to continue to hike interest rates. And ultimately what's happening is those interest rates are getting hiked. At the end of the day, big businesses getting hurt by those interest rate hikes. So ultimately, that's going to come back to me as an investor to think about what types of companies are going to do well should pain come our way. And those types of companies, as I like to see it, and as I like to say it, webinar to webinar, are the companies that have a very strong leadership, so great management, a great brand name for themselves, and of course, a very clean, squeaky clean balance sheet, little to no debt, see through to a recession should one hit, whether it's light, mild, or a deep recession. You want to be invested into those companies that can really, as Fed Chair Powell shared, make it through a bumpier time. So I myself, as an investor, I am preparing for the worst, but of course I'm planning for the best, which is why I want to take you now over to TipRanks, dive into some of the tools and features that I think, at least at this point in time, we all should be utilizing as investors, and then wrap up with an update that we have for you here at TipRanks, which is very exciting. And then we'll close up shop for the day and get everyone on their way investing. So I'm going to go ahead and share my screen. And we are now on the homepage here of TipRanks. Now, the first spot that I want to draw our attention to is research tools. And we are going to go on our right-hand side underneath calendars all the way down to where we have daily insider trading. So daily insider trading, for those of you who are not too familiar just yet with TipRanks, or if you've been utilizing TipRanks but are not too familiar with insider trading, is essentially when an insider, so somebody who's working for this company or has a stake in the company in and of itself, is making a trade, whether that's a buy or a sell. Now, every single day as an investor, I am actually jumping onto TipRanks and coming to this very page, Daily Insider Trading Tracker, because I want to find out what insiders of what specific companies are doing. So let's just say I have a company A in mind, and I know that their CFO or their CTO or CEO or a 20% stakeholder is either buying or selling a position. That's pretty solid information for me to then add that stock to my watch list and take a look at what's going on with that specific stock. So what I actually do for myself for stock ideas is I go underneath transaction, I check off informative buy, and you can see that the list is already starting to filter out. Now I could do something like insider rankings. So maybe a 4 to 5 star ranking here for that insider. That essentially means how successful that they are in buying or selling in or out of their particular company. I could mess around with the amount as well. But for our purposes now, again, just keeping this bare minimum here to our stock ideas and how exactly we can generate these stock ideas on TipRanks. This is one of the first spots that I'm going to go to, because if I know that insiders are doubling down on their own company stock, it is a green flag for me to add it to my list of stocks to then actually dive into and do more due diligence. Now, I want to stress that because across the board, I think a lot of us get excited and we go and we find, let's just say, Wealth Minerals here, and we see that they had David Lee buy today, and they go ahead and proceed to transact, make that investment with Wealth Minerals. But just because David Lee is buying into his own company's stock here, it doesn't necessarily mean, number one, it's great for my portfolio, and it doesn't necessarily mean it is a great buy and I should buy. What it means is that I should start perhaps doing my due diligence if Wealth Minerals makes sense. So I would just go ahead and click on that ticker. It brings me right over to Wealth Minerals page. I always go over to stock analysis. I take a look at how they've been performing on the year, and I try to piece an economic picture for myself, inclusive of Wealth Minerals within that economic picture. I can look at some other indicators here. Go back to that previous page for us. But you can see that we have a multitude of different stock opportunities. I like to say again, are just opportunities for us to then begin to look into. Now I want to bring us back over to research tools and head over to daily analyst ratings. Again, that is underneath calendars. And here we are, a full list of stock ratings recently rated as of today. Again, this is another opportunity for us to generate stock ideas. And it is also another spot on TipRanks where I actually go every single day to take a look at what analysts are saying what and about what particular companies. So I like to invest with what I say are the best, and I always hit 4 to 5-star analysts. Just means they have a bit better of a rating than other analysts here. Now I can take a look at whether or not these analysts are forecasting upside or downside. The recommendation type, if I'm looking for stock ideas, perhaps I just want to look at analysts who are recommending stocks to buy. And I can have this list now in front of me, and very similarly to what I just shared, that we can go ahead and look at these stocks and then do our due diligence hereafter. So just scrolling down this list, I'm just going to select Hertz Global here. Again, our stock analysis page is where I typically like to go first, and I try to paint that economic backdrop along with Hertz Global into the same picture, question why this stock is actually down on the year, in our case here by 5%. I can go to our right-hand side here with some other indicators. We see that there are bloggers out there with a lot of bullish blogger sentiment. May want to click into that blogger sentiment. One more to the right, we have hedge fund activity, a decrease in hedge funds. That means selling out of Hertz. But again, I am here, at least in this case, for an analyst forecast. So heading to our analyst forecast page, I have, as I'm sure we are all well aware of, a detailed list now of the analysts who are covering Hertz. Now, a few webinars ago, if you were with me a few weeks back, we dove into a brand new feature on TipRanks because we were listening to our community. And we said, why would anyone want to jump onto Hertz's page and just pick any old analyst to run with? And so we one-upped what we are currently doing, and we did the best analyst covering Hertz Global. So this is essentially, if you were a coach of a team and you wanted to pick the best player for the field, you want to make sure that your team is, quote unquote, stacked up to make sure that you're going to ultimately win the game. And so instead of just picking any old analyst, you want to go one below and find yourself with the best analyst that is covering Hertz. Now, this is across all stock pages that we have. But now we see here that from 1 month, 3 months, 1 year, and 2 years, we have different analysts who are covering the stock who are perhaps better than the other in that time period. Now we can see we have the most accurate analysts and, of course, most profitable analysts. This all comes down to essentially how you are investing. Now, just for the fun of it, I know that we have a hot stock with all the AI news coming out. Google. Just to give you another example here. So across the board, 26 ratings here, a strong buy for Google. And we get this detailed list. However, in scrolling down, now we are going to get the best analysts covering Google. And again, we have different analysts for the job that we can pick for most profitable and most accurate. So instead of me running with, say, one of these top analysts up here, Rob Sanderson, I don't know if he's necessarily the best for the job when it comes to me following an analyst on Google stock. But I do know that these are my best analysts covering Google stock. And depending on how I'm investing, if I'm a long-term investor, which I particularly am, I'm going to be looking at the 1 year timeline and the 2 year timeline. And I can go ahead and click over to Ronald. we always want to go the extra mile here. And taking a look now at when Ronald actually rated Google. And now you see the track record of Ronald's rating a buy for Google. And you can see he's doing it here. This is last January 22nd. So now, is this the opportunity for all of us to buy? Certainly not. It is just another aspect. You're going to continue to collect pieces of due diligence for yourself as an investor, and you'll want to come back on to Google's stock analysis page and continue to do that due diligence. But just knowing that Ronald is one of the best analysts covering Google, Ronald may be a player on your field to ultimately come out on top when it comes to an investment with Google. So here we are back on Google's stock analysis page. Now we do have a brand new feature. It's in 2 locations, but it is our advanced charts here feature that you can find on the left-hand side. And so here we are with an advanced chart. And what exactly does that mean for us as investors? Well, I'm an investor who always likes to paint trends for myself. So what I like to do is I come to this chart page and I'm going to hover over events and get the drop down. And I can actually see when Google reported their earnings, the ratings of analysts, and when insider trades were happening. So for an example, I could see when exactly we had Google insiders selling out of their positions, and I can paint this trend for myself. Now I can go to Analyst Ratings as well, and here we are with a lot of recent Analyst Ratings coming in with a buy. But in clicking in any of these buys, we have Ronald actually, which was one of the best analysts for us. Again, it comes down to whether or not Colin or Ivan or any of these analysts are actually rating Google a buy and if they're trustworthy when it comes to Google. Because I always want to invest with the best. That is exactly when I would head over to Analyst Forecast, and then I would dive deeper into the best analysts covering Google. Now I'm going to pop back on the screen with everyone for a hot second and share with you that based on our economic backdrop of an uncertain year that may lie ahead of us, a lot of investors out there have that big question of where and how to invest. Now, unfortunately, I can't stand here with an esoteric formula and share with everybody, here are the rules to successful investing in 2023. And if you invest in these particular stocks, you're going to ultimately outperform the market. But what I can say as a fellow investor is that a lot of the times, if we're investing in the entire index, we have a great opportunity to at least track the market and invest with the market, if you will. So what TipRanks did in listening to our community and making sure we're doing just that is delivered through on a brand new feature that I want to update you all with now. TipRanks allows for each and every one of us to now take a look at index and ETFs pages. So you can see here, I just pulled up Vanguard's Total Stock Market Index Fund, and I have the same metrics that I can use whether or not I'd like to invest into VTI. Again, that's Vanguard's Total Stock Market Index Fund. This particular fund has over 4,000 stocks within it, anything from large, mid, and small cap companies with a pretty balanced mixture of growth opportunities as well as value opportunities. So again, in knowing that the year ahead may be pretty uncertain, and I may not know exactly where or how I'd like to invest as an investor, but I want to play the entire market, play it a little bit safer. As John Bogle always shared, the founder of Index Investing, that it is best to just have an investment within a broad-based index. Perhaps I want to jump onto TipRanks and now begin to search through which index funds or ETFs are going to be best for me. Now, it would not be a TipRanks webinar without sharing with all of you to go ahead and check your emails, as we have an email coming out your way so you can take advantage of all the tools that we have for you in 2023 to navigate your way through what very well may be an uncertain year. And I want to leave you with this before I actually log off for the day, to keep your eyes on the Federal Reserve presidents and officials who will be speaking throughout the remainder of the week, as we had Powell's speech just the other day, in which he clued us into really what we can expect, which are more interest rate hikes to come. throughout the year, and of course, a prolonged period of higher interest rates with some higher inflation mixed in there, which creates that uncertainty. And now begs the question is, when is each and every one of us ready to begin to invest like a pro that's taking advantage and full advantage of all the tools that we have here at TipRanks? Invest prudently, invest cautiously, and of course, always do your due diligence. Our team is here for you. Thank you again for joining me on today's webinar, and I will see you all next week. Thank you so much.